Tuesday, January 10th, 2023, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at the dollar and in particular the dollar index and why I think we've seen a major reversal, or if you want to call it a bull trap, in the dollar index. And that could be pointing not only to financial and economic trouble, but also geopolitical trouble in the next 12 to 18 months. Before I start though, I like to thank those of you who sent me some packages to Gold Investments. I was there yesterday to meet Oliver Tempo. I try to go there at least once a month. Thank you again. You will know who you are. I won't use names. And I'd like to say as well that some of you asked me on Sunday during the live stream to show a photo of Billy. I didn't have a photo with me then, so I decided to do this for you. This is an old photo of Billy. Most of you know, of course, that Billy passed away back on December 12th. He was 14 and a half. And for the new viewers and subscribers, Billy used to lie down on the sofa during my videos. Sometimes he used to get up. Sometimes he used to just sleep and snore. So people miss Billy. But I've also put the latest picture I've got from the breeder of Rudy, who's coming home in February. He's grown up quite a bit since my wife and I saw him. I think he was about 5 weeks in this photo. So there you go. And talking about Gold Investments, also, I like to thank all my affiliates, precious metals dealers, here in London, of course, in the UK, Gold Investments. I have a promo code with them. If you're looking to buy gold or silver, think about using Gold Investments. Of course, you're free to use whoever you want. Promo code there is Monaco64. You'll get a small discount. I'm also affiliated with ITM Trading and Lynette Zhang in the US, and Miles Franklin and Andy Schechtman. You'll find all the details below in the description. So the dollar index, yes. I've spoken about the dollar index for years, and I even have a playlist, a dollar index playlist. And for those of you who don't know what the dollar index is, it's just a measure of the dollar versus the major Western currencies, and it was created really back in March of 1973. It started trading at 100. It is measured back before that time, though. You can extrapolate. But yeah, the dollar index is about 83% the euro, the yen, and the British pound. And we know that last year there were some currencies that performed better than the dollar, like the Brazilian real and the Mexican peso and even the Russian ruble. So yeah, the dollar has been kind of king versus these major currencies since 2020. But I've noticed that we've made a big reversal, especially on long-term basis, and this is what we're going to look at, the long-term basis for the dollar index. I've got this chart here. It's a quarterly chart. I've looked at this many times before. You will probably find it if you go into my playlist and watch some of my videos. And I found that there's like on average, like a 7.5 year cycle in the dollar index. What does that mean? Well, I found that there are down legs and up legs, and they usually last anywhere from 7 to 9 years. And back in 2017, or just after 2017, I realized, and I thought that the high from the first quarter there in January of 2017, that 103.82, was a significant long-term high. And why was that? Well, because the previous significant low, the all-time low in the dollar index, just above 70 there in March 2008. And we know what happened in 2008. After the big drop there in the dollar index, we had the '08 financial crisis. And it's one of the reasons why I think we could see trouble ahead, financially, economically, and geopolitically. We'll come to the geopolitical in a minute. But from March 2008 to January 2017, that was almost 9 years. And I thought, well, this cycle is long in the tooth. We're going to turn down. And it did. And it bottomed a couple of times there at 90. It made like a double bottom. And then last year, it broke through the high from 2017. And there was also like another high back in the beginning of 2020. We broke through that. And of course, gold as well broke down below 1700. But as we've seen with gold, that break below 1700 seems to have been a bear trap. And I think this could be a bull trap, because as you see now, we closed the year last year below that 103.82, and we're continuing to go lower. As of yesterday, we're at 103.04. So I wanted to go through what a bull trap is, because I think this is what it is. It's a bull trap. And I have to thank Cointelegraph.com, which is more of a crypto site, but they talk about what a bull trap is. And so let's go through it. It says, what is a bull trap in trading? In trading, a bull trap is a situation where a trader buys an asset believing its price will continue to rise, only to see it fall sharply after reaching a new high. So of course, this is not a short-term bull trap in the dollar index. And as you can see here, this bull trap that I think we have in the dollar index. And I have to say, technical analysis is not perfect. Just like I thought that cycle was going to go down, but we had this bull trap. But now it actually could be reasserting itself. And look at this chart here of this bull trap. It looks very similar to the dollar index chart. So it says here, bull traps occur during periods of market uncertainty, or when false information is circulating about a particular asset. It's called a bull trap because traders who are none the wiser are made to believe that a declining asset is actually on the rise. This false sense of security can lead to heavy losses. So, yes, the dollar was strong last year versus most currencies. What's the false information, I would say? Well, the false information is to think that the dollar is king and that it's strong, but because it isn't. Versus gold, for example, which is really money and which has been a measure of value for thousands of years. And that's what I think the false information here is. I mean, look at all the debt that the U.S. is still accumulating. The national debt is almost at 32 trillion. We've had this new stimulus omnibus package, 1.75 trillion. It doesn't look like Uncle Sam wants to do anything that is reversing that. Yes, I know the situation has changed in Congress or in the House right now. We'll have to see about that. But I think it's pointing to a big reversal. And as you can see from this chart here of a bull trap that I took, the reversal can be very sharp and quick. And I don't think the dollar is going to collapse, for example, versus the euro or the pound. Yes, it will go down, but it will really collapse versus gold and hopefully silver. I know silver is struggling a little bit right now, but I think that's temporary and short term. So am I telling you that you should have euros, yens, and British pounds? No, because I think gold is going to outperform those as well. Geopolitically, Well, what's it pointing to geopolitically? Well, I think more trouble ahead in terms of geopolitical tension that we're seeing. We saw the other day the Russians said that their war in the Ukraine is not against the Ukraine, it's against NATO. So it looks like it's ratcheting up. The Chinese have had military exercises near Taiwan. And we've seen that the non-NATO countries, the BRICS or Global South, they've bought the most gold since 1967. And as you can see by this quote from Alan Greenspan, he said, "Gold still represents the ultimate form of payment in the world. Fiat money in extremis is accepted by nobody. Gold is always accepted." What does he mean here? Well, in times of extremis, that means geopolitical tension, war, be it Cold War or a kinetic war. And I think we're moving more and more towards this kind of world. And yes, that's why I think this could be pointing as well, this reversal in the dollar, not only to trouble financially and economically like we saw in '08, but also geopolitically. And with that, let's quickly look at where the markets are this morning. I will also be answering some of the questions from last week after I look at the markets. So if you want to listen to those, make sure you, you stay tuned. So I'm a little later today. It's 9 a.m. London time. We've got spot gold at $18.75. It's up $3.50. High's been 76. Low's been 66. Silver is trading at $23.50. Is down 15 cents. Low's been 41. High's been 73. The Dow futures is down 75 points. The Nasdaq 100 futures down 16. S&P is down 6. FTSE is down 20. To the currencies, sterling is down 0.25%, 121.58. The euro is unchanged at 107.30. The dollar is unchanged versus the yen, 131.91. I've noticed the dollar has weakened significantly versus the yuan. We've gone from above 70. We're now at 678. It is unchanged for the day, though. To the other currencies, we've got the Aussie dollar down about an eighth at 69.00. The dollar is up slightly versus the Canadian dollar, 133.94. And the Kiwi dollar is unchanged at 63.76. Let's go to the general commodities. Platinum is unchanged, trading around 1,080. WTI crude is down just over 0.5% at 74.40. Brent crude is down 0.2% at 79.20. High grade copper is down 0.2 at 401.65. And US nat gas is down 4.5% at 358. We'll quickly check the bond markets. The 10-year yield is up 4 basis points at 356. The 2-year is up 4 as well at 423. And the UK gilt market is under pressure a little bit. Yields are up then. Yeah, when yields go up, it means prices are going down. The 30-year is back above 4%. The 10-year is almost at 360. It's up about 5 basis points. And the 2-year is up just 1 basis point at 345. So let's quickly look at some of the questions from last week. We got a few, but we'll just do the first 3 today. It says, this is from Don't Get Scared Now, and it's from the Hyperinflation is All But Set in Stone video. So, would I sell my silver when the dollar hyperinflates, or would I wait until there's a new form of currency? I've spoken to Star Path Academy about his experience in Romania in the 90s with their very high inflation, kind of hyperinflation. and they didn't really use too much gold or silver back then because they're coming out of a communist regime. But I would say some silver might help you exchange with other people. Some people might call it bartering, but I would say you'd be able to buy things with some old constitutional silver coins in the US or in the UK, some pre-1920 sterling silver coins. People might accept that, but yes, if you're able to hold to your silver past the hyperinflation into a new currency, yes, I think it could be interesting to exchange some of your silver for assets that you think are undervalued and that you'd want to have. Yeah, you would have to go through the new currency, but I wouldn't necessarily just exchange my silver and put it in the new currency just to park it there. Okay, so that's my answer to that question. Number 2, do you think they will put VAT or VAT on gold again? Tony Hammond from the same video, and I assume he's here in the UK. The thing with the VAT on gold, there used to be VAT on gold, and I was told by actually Oliver from Gold Investments, the reason they had to drop the VAT was that there were dealers that were buying their gold from countries like Belgium that didn't have VAT at the time, and claiming and selling it here and claiming to the VAT man the 20% or whatever the rate was at the time. So they're getting paid back by the VAT man, and they were actually not paying VAT in Belgium. So the VAT man was losing out a lot. So I don't think there will be VAT again on gold. But if there is, it's another reason why you should probably be buying it now. Last question here, number 3. How long will the hyperinflation last? And it's from Robert Costello, same video. Well, I look back at history to see how other hyperinflations, how long they've lasted. And the one that I look at mostly is the one in Germany in 1923. And if you look at the charts of the Reichsmark, it really started collapsing in the summer of 22. Yes, there had been normal inflation prior to that, ever since the beginning of World War I, but it really took off in the summer of 22. And by the end of 23, the Reichsmark was finished, had collapsed. They went into the Rentenmark. So it took about 18 months. It could take maybe a little longer, but it's not something that will last for decades, because you can't really sustain society for that long under a system where there's no currency around, especially in the modern industrialized, specialized economy. So I don't think it would last that long. So there you go. I hope you have a great day. Take care. Bye.